Hi there everyone, this is Brad Gilbert with the Week Ahead Guide. Alright, now we've got a pretty interesting week coming up, obviously with Easter coming up on Friday and the whole weekend, Easter Monday as well. It's going to be a pretty short week, and even to start that, we've got the Japanese bank holiday on Monday. So the Asian session is going to be a pretty quiet start to the week, and then once again a very short trading week with Friday coming pretty quickly. Alright, so looking at these major key releases, there's a whole bunch of high impacting releases that you need to be aware of. These events are the key ones that we'll be focusing on, especially for those live trades as well, especially around those situations where momentum can change very quickly, and it's from these high impacting releases. Of course, there's even different levels of high impacting releases. The UK CPI and retail sales, all to do with sterling. Looks like the cable will be the sort of one currency pair that we do watch very closely. Of course, there are other sort of not quite equally as high impacting numbers, the German IFO numbers, the ZOO numbers, a couple of central bank announcements there as well, the RBA Governor Stevens, ECB with their targeted LTRO, and then finishing the sort of week with US durable goods is a good collection of numbers. Okay, it's spread out a little bit as well, so it should give us some nice potential opportunities. Now the US dollar, the dollar index itself, okay, after that move from the FOMC, has now stabilized. It's gone from 97 down under 95, now trading sideways. So the currency, or the dollar itself, dollar weakness is in the market. That's the sort of ongoing trend, I would think, from here until something changes, and that dollar index, now trading sideways, is looking for the next leg of direction. Now what that does for us as far as the Aussie dollar, we've got a nice steady uptrend there. We've seen the Kiwi kick through resistance at 68, the figure. This is following the RBNZ interest rate cut last week as well. Market caught short, squeezing all the way up well above 68.5, and now sort of just drifting back into the range. So I think the Kiwi, I'd prefer to look to sell on rallies probably this week with no other New Zealand news coming out. It should follow the Aussie dollar, so if the Aussie dollar sort of keeps moving to the top side, then you should see the Kiwi move with it, but it will be slower. Okay, probably a natural trade there on Aussie Kiwi, looking to get long Aussie Kiwi at some decent levels. Dollar yen has been belted down after that dollar weakness. I have got a sort of a low in here going back to Feb. We've got it's like a double bottom, I guess you would call it, around 110.95, 111 the figure. Okay, we've got those two levels there in February coming across. Now it has broken down through these, but I just want to give myself some sort of indication of those previous lows, and bear in mind if you do come back and look at the dollar yen chart, okay, you've got to wind it right back towards 112. I think around the fourth quarter of 2012 to really start to find those low-lying support levels. They are so far away, they're no good to us. Now, if you draw a line from the low to the current market, well, that gives us a bit of a short-term support line. Comes in around 110.70, but with that, I wouldn't get too excited. It's only got two touches. What I am more important about, or thinking more about, is the fact that the BOJ were coming in checking interest rates, currency levels, around under 110 or under 111 the figure. So with that, you are sort of very suspicious that the BOJ are not happy with the currency down there, and we may see these things slowly squeeze back to the top side. If you can get above this cloud, and bear in mind it is a Japanese holiday on Monday today, so you may not see too much activity there. I'm definitely looking to sell on rallies back up towards that 113 the figure though. Now let's just have a look at Euro. Okay, now obviously ECB have come out, basically cut rates. Then their press conference, Draghi's mentioned no more interest rate cuts. Seen a massive move to the top side in Euro, like a huge, caught the market well by surprise. And then the FOMC on top of this gives the Euro a massive shot in the arm, getting it up well above 113 the figure. I think this is where it starts to get tricky, and you can see where it's sort of stalled here. The Euro have got their own sort of debt issues. They've got loads of problems. They haven't gone anywhere, and don't forget they have got negative interest rates. I think they're at minus 0.4% now. So with that, it's pretty hard to be getting long Euro. The only reason why Euro's up here Market was short euro and they were long dollars. Now there's been two events here which have led to a massive short squeeze. I think everyone's out of those positions. If you come back looking from 117 sort of 10 at the top, you do have that resistance line coming along across to 113.40, that current level. We've also got a yellow line there, just a horizontal line, 113.75. That was the previous high on that last run. So just bear in mind that euro up at those levels is a little bit tricky because it's hard to work out, you know, are they done yet or not? Now looking at sterling, sterling's had an interesting couple of weeks. Okay, we saw a massive sell-off in cable. This is more to do with, you know, just rubbish, geopolitical stuff about Brexit, about Britain's potential exit from the EU. Now, that was all conjecture, politicians, everyone was throwing their two bob in. Now, what we're seeing is a nice move to the top side, more on a change of central bank sentiment. Okay, you got the Bank of England, who have come out and said if they are going to raise rates, it's going to be, you know, short term. So, I mean, a slower process. So, basically, it's more hawkish than a dovish picture. Of course, you got the ECB in there as well. Sterling rallied aggressively with euro on the back of that, as you would expect. And then we've got the FOMC as well. So it's been pulled from pillar to post. Sterling is having a hell of a run, close to 500 points there last week. Now that's a huge move. Don't forget there were a couple of central bank announcements, so you do get that potential for 500 points. But in saying that, it's very hard to see it sort of maintaining those levels. I mean, you would expect some sort of pullback, and this is where Tuesday's CPI numbers come into play. If we get weak CPI numbers, this thing should drift back down, probably back down towards 143. I'd even go as far to say back down towards 142.5, especially if you do start to get a bit more conjecture about Brexit and about the potential for the UK pulling out of the EU, and then also, you know, I mean, that just sort of slowly builds and burns away, and there's a very negative picture or negative outlook on that. Now I can just adjust this trend line on the top side actually, just to get up to that highest level. That looks a lot better at those levels, even though there is only two touches there. That's the better trend line or the better high to be trading from. And I can even go back and draw a secondary trend line from the point where it broke down. Okay, that other high, it makes a bit more sense as well. You want to get prepared. This is basically getting prepared for the move higher and seeing where the potential levels are on the top side. So if I just drop that down, you'll see up on the top side there, you've got the first trend line here around, was it 145, 10-ish, and 146 sort of 25. So you got a couple of levels there to work with on the top side. But as I said, it's got a nice setup. If the CPI numbers on Tuesday are weak, this thing should drop down. As I said, I mean, there's plenty of room for 142.5. It would really depend on the level of variance in those CPI numbers from the forecast. But even that trend line on the top side will create a good opportunity, good entry opportunity if those numbers are somewhat strong. Now let's just go over to the CAD. The CAD's been extremely lively. We did have a couple of numbers out last Friday, CPI numbers and retail sales figures. Those CPI numbers came out weaker, pushing the dollar CAD up. We had stronger retail sales figures, which pulled dollar CAD back down. So what you get is that to and fro sort of motion, which it's not easy to trade. But one of the key things I think we're going to be looking at is oil topped out around $41 a barrel. It's back at $39 a barrel. Looks like it's ready to go further south. So I think that's going to support a dollar CAD move back towards 131, the figure at least, if not 131.5. Okay, still looking to get short dollars on movement there, back up towards that resistance line. But this oil trade is still the flavour of the month. Okay, if you have a look at this support trend line, I'll just bring it back across so you can see where that top is. The resistance line, if I just go to the daily charts and show you how it's a little bit convoluted on the top side, and that's because the move down from, you know, above $100 a barrel down to here, it's so steep that you have to end up coming along looking for other tops where you do have some sort of shape and to give you some sort of level of resistance. So those resistance levels aren't like awesome, but the support line is. Okay, it comes from the low, it's got a number of touches, there's been a couple of little cheeky false breaks on the downside, but even in saying that, they have actually provided a few opportunities to take some short-term cash out of it. Now, I think the base for oil is here. So I'm looking to place some limit orders in here around 37.5 bucks a barrel to get into this oil trade and sort of try and hold it a little bit longer, because if we can get some sustained movement and just consolidation, then I think we might see oil back up towards 50 bucks a barrel, and that 37.50 looks like a great spot to be trading. If you're not sure about it, well, then the simplest trade to do is actually just put a break trade on the downside, look to capture that move down, and that's the one trade you could always go into, the break trade, if you don't really have an opinion, or if you're not even watching the current or the instrument, the commodity in this sense. So yeah, anyway, so with that dollar CAD, keep an eye on oil. It is the main driver at the moment. The Canadian fundamentals a little bit up and down, so no real direction coming from the economics. So look at these major currencies. Aussie dollar looks like very attractive. Good Australian economic numbers, weak US numbers. You've got to be looking to buy on dips on that sucker. The euro, well, it's a bit tricky. Okay, it's come a long way. I can't see a reason to buy euro except if the market was, exceptionally long dollars. I think they've been cleaned out there as well. So the easiest thing to do is, with euro, come back over to the euro crosses and start to have a look through some of these pages. I mean, some of these charts. What you've got is, you're seeing a bit of fatigue here in euro Aussie and euro Kiwi. Euro sterling is, to me, the one key cross which does give us a bit more understanding about what's going on in euro. Euro yen got a really nice setup, short-term trend lines. I like the fact that euro yen could go to the downside. This is I'm sort of a bit bearish on dollar yen, but probably more on a rally. So probably looking to sell on a rally there. The Aussie, good support trend line. Euro sterling. You're trying to isolate here back to that euro. You're trying to isolate the best technical setup, and that's when you can bring back those economic numbers and really sort of tighten up the picture. Okay, we've got euro consumer confidence numbers there out on Tuesday, or Monday I should say. The Tuesday we've got the German manufacturing numbers as well as the IFO business climate. You've also got the German ZU economic sentiment numbers. Now, those IFO and ZU numbers, traditionally are very good precursors to movement in the currency. Throw in German manufacturing as well, and this is it's a good little run of numbers to potentially get us into a nice trade here on euro. It'll give us direction. All right, and that's what you're really looking for to nail some of these crosses. Don't just wait on euro. Get your charts sort of set up here as well. And we could potentially be looking at some really easy opportunities. The Aussie, well, yeah, sure, we've got Stephen speaking on Tuesday, so keep an eye on that. If I just go into the filter here, this is where you can really isolate those high impacting releases, because these are the ones that you need to be looking at. Okay, and first up, of course, you got crude there coming out on Wednesday in the US session. UK retail sales and CPI figures, of course, make sterling a major trading opportunity all week. Throw in those durable goods as well. So there's two things here you need to be trading sterling and US numbers. We've got these this week. It is the major currency to be watching. All right, now just on Tuesday though, as you come in through Tuesday, let's have a look at not only sterling, but keep a close eye on euro. As I said, we've got support and resistance here. We've got the German ZU numbers and the German IFO numbers. Throw in the UK data there as well. The European session is definitely going to be the go-to this week, especially with that shorter week. There's no major releases out of Asia. There's only sort of two central bank events. Okay, I'll come back to that in a second. But just having a look across through some of these other currencies, there's no data out here on in Kiwi, which makes the technical picture a very good trade to be looking at. I've just got a horizontal line there. It looks like a bit of a pivot point around 67, sort of 80. It was a previous high. It's sort of just been banging away there. So I've been having a look at that. I think Kiwi selling Kiwi on rallies is a good idea, and hence why I'm looking at Aussie Kiwi as well. And okay, so that's your general week for the major currency pairs. As I said, you need to sort of isolate the best technical setup on these major currencies, and then you can go back and drill through the various crosses. Okay, so looking at the central banks, there are only two events, as I was saying there. RBA Governor Stevens speaking, and the ECB's targeted LTRO. Right, they're two things to look at. Now, it is a better week primarily because they haven't got so much to speak or as much released, so it brings in the economic numbers to the forefront. Okay, so it does make trading a little bit easier. And as I said, a shorter week. Rule out Monday. As I said, Japanese holiday. You're looking at Tuesday, sort of Wednesday, Thursday for your trading this week. It should be easier for you to manage anyway, and it's not too different to most weeks where Monday is usually a bit of a scratch through Mondays as the market reconnects. All right, so the best thing to do is get your charts up to speed. Have a look at some of the key levels. Have a look at what some of the themes are from the central banks at the moment. Obviously, FOMC weak dollar, ECB. Well, we saw a massive move to the top side. And just as actually looking at these charts here, I do like the look of the setup here on dollar CAD. We don't have any major resistance levels, but it looks like it's struggled to get above 130.50. If we see oil fall away here, well then you're going to see a nice easy trade on dollar CAD back up towards 131, 131 and a half potentially. And the dollar index, keep an eye on this one. It does give you a good overview of where the dollar is. As I said, at the moment, trading sideways. It is looking for further direction. We'll be keeping a close eye on the US equity markets and its impact on global equities. See what the movement is across the board, and then hopefully sort of put the pieces together. So get your charts up to speed, check out the high impacting releases, and then you'll have the entries, you'll have the directions, and then we can start to play some of these low risk, high probability trading opportunities. All right, guys, it's a short week, but I think it's a bit of a cracker. Good luck, and we'll see you in the live trade zone. Cheerio.